Hi there, welcome back to my channel. This is Morris from San Jose Options. So before we get started, let's do a quick recap on the last class that we had. So if you recall, last week we were looking at a strangle and we wanted to see how that strangle performed over the week. Well, it lost 8.76%. Then we were comparing that trade to a calendar over the same period of time, and the calendar profited 16.44%. Then we also looked at a short Condor spread, and this one we don't really talk about much because of all the negative theta. But this trade was up, 12.85%. So it's really interesting because last week the market moved about 1.4% to the upside, and the volatility increased just a little bit. And with that increase in volatility, well, we can see the impact that it had on all of these trades. So again, Strangle, it's down 8.76%. Calendar is up 16.44%. And this short Condor is up 12.85. So now let's go ahead and see how these trades perform this week. Now let's take a look at what happened this week to the Strangle, to the short Condor, and to the calendar spread. So like we were discussing before, if the price continues up on SPX and the volatility continues up, then the calendar could benefit and the short Condor could benefit, but the short Strangle would be hurt. So that's exactly what happened this week. The market continued up just a little bit. It was under 1%. But now the Strangle is really underwater and getting into some trouble. Let's take a look. So here we see the Strangle is now down 31.80, and that represents a loss of almost 16%. And again, SPX didn't move up much this week, but with an increase in volatility and a slight move to the upside now. So the calendar spread this week really didn't change much. We're seeing a return of 16.44% over the last 2 weeks. Next, we're going to look at the fun trade. This is the short Condor. Again, this is a strategy that isn't talked about much, but there are specific times when we can use this strategy, and this is one of them. So if we take a look over this last week, well, the short Condor is now up $6,785, and that represents a return of almost 33%. So imagine that you have a return of 33% in a matter of 2 weeks. And this is a strategy that the majority of option traders never use. And why don't they use it? Because it has a negative theta position. And as I told you before, theta is like a mirage. And in this case, your theta position frightens people away from a trade that could potentially be a winner. So that'll conclude the lesson for today. So far into these strategies, about 2 weeks, and just studying them and comparing them. So let me leave you with this. If you were in these trades, what would be the next step for you to take? For this short Condor that's up 33%, would you size it down? Would you adjust it? Would you close it entirely? How about the Strangle strategy? It's way in the hole. Would you continue with this trade? Or would you size it down, or would you just exit? And the calendar, same thing. I'm interested to hear what you guys would do to these trades. Go ahead and post your comments below. Thank you for watching, and I will see you in the next video.